Financial advisor Allison Gilman-Aquino here with what's in store for investors cashing in on the nice list.
Yeah, and that's a list you want to be on, isn't it?
Yeah.
You've always heard, Sean, about how the squeaky wheel gets the oil, and it's much the same lately with all the financial news. It's all the bad stuff that makes headlines. So I think this morning it's time to spotlight some of the good things that are making the financial markets a little bit nice.
And we like to hear it when some people are returning to work.
Yeah, I mean, the unemployment rate is stubbornly high. Yeah. Lauren just said it. We all know it. We all know somebody who wants to work who's not. But if we're looking at the bright spot, there is an 8.6 unemployment rate in this country, which is a 2.5-year low. And if you look at the statistics, more than 1.5 million jobs have been created in the past year and a half.
And some people are spending more money again.
Yeah, and you look at things, the big ticket items, you know, the washers and dryers, the cars, for instance. Yeah. U.S. auto reports are that 14% growth in November for the sales of trucks and cars. It's, you know, the highest growth level in more than 2 years. And then you look at the holiday shopping numbers, like we talked about on Monday. A lot of action on Black Monday. You had a big uptick in sales over that long 4-day holiday weekend as a lot of retailers opened up their stores at midnight on Thanksgiving, and the shoppers, as always, came flooding in.
Big American companies sitting on a ton of cash.
Yeah, about $2 trillion. Think about back to the recession, Sean. American companies got so lean and mean. They cut their payroll. They cut their inventories down, and now we know that in November, 312 of the S&P 500 companies increased or initiated a dividend for 2011. So from January 1st through the end of last month, we had 312 of those companies initiating a dividend or increasing their dividend, which is up significantly from both 2009 and 2010.
So they're just afraid of spending money right now in this environment.
They want to make sure the economy is going to hold up. And, you know, the other thing is everybody's kind of holding their breath trying to figure out what Congress is going to do about taxes. Companies don't want to take that big step and commit to something when it may come back and bite them when tax laws change.
So the key here for us, just keep your perspective on all this.
Yeah, and here's my big perspective point this morning. Yeah. The economy in Greece, according to Franklin Templeton, is about the size of the economies of North and South Dakota. So I know if anybody in Greece sneezes, the markets either go way up or way down. But what I'm saying is this is a volatile time. I think it's going to continue through the end of next year. Cooler heads need to prevail. You need to try to take as much of the emotion out of your investing as you can. Control what you can, which is fund your investments. Make sure you're well diversified. Stick with your long-term plan.
It's so true. I feel like, you know, if you follow any of these business channels, that's all you hear about is Greece so many times. As little as that is.
North and South Dakota.
Yeah.
Just think about that.
That's something to remember. It really is. Thank you, Allison.
You're welcome.
If you have any questions you'd like to pass along, wake up 6 at fox6now.com. Beer and Christmas lights. Miller Coors getting into the holiday.